The U.S.-China trade deal isn't the right one for America. Investors seem to be putting up a cautious tone this morning about the situation with the two countries. Wells Fargo senior economist Mark Vitner joins us now as we take a look at futures. Mark, look, there seems to be doubts about this, and there are reports in Asian papers, especially the South China Post, that the Chinese all they wanted was an extension, but that they're going to delay and delay and delay. Why are the concerns about the U.S. and China coming to an agreement?
Well, I think that initially there was a sense of relief that things are not going to intensify, that we're not going to jack up tariffs more on January 1. And I think that's why the markets rallied yesterday. And today, and really even by mid-morning yesterday, folks realized that, hey, there's a lot more wood to chop. This thing's not done yet, and we've got a ways to go. But I sense that this is more positive than the markets realize right now. I remember when I realized that Trump had a very good shot at winning after he won the Republican nomination, I went out and bought The Art of the Deal. Probably should have read it beforehand. But if you look at The Art of the Deal and you look at the tenor of Trump's negotiating stance,
right.
I sense a pivot here, and I sense a change from using sticks to using carrots.
Well, and he's sending. We should add that the new news is he's sending Robert Lighthizer. He's a hardliner. Robert Lighthizer does not, he's not playing around when it comes to the Chinese. But what about the economic side of this? You're the economist, not me, Mark. If the U.S. economy continues to be strong, if GDP reads continue to be strong, unemployment continues to stay low, doesn't that give the U.S. a better negotiating spot against the Chinese? And they're the ones that are under pressure. They're the ones who are going to see a GDP drop, not us.
Well, that does give us a better negotiating stance, but that's where we were. And if you look at the more leading indicators on the economy, particularly things like capital goods orders, motor vehicle sales, home sales, they've all weakened. And so I think that fourth quarter GDP is likely to be pretty strong, 2.5%. We're not about to fall off a cliff. But I think that our advantage there may wane a little bit if we don't start making some progress. And so I think that's one of the things that has caused the tone to change a little bit. But, our own survey that comes out this morning, and this is new, it's the first time I'll say it, on
right.
small business confidence is at an all-time high, 129, the
Good.
highest it's ever been in the history of the survey.
That's positive.
Main Street employs over half of the workers in America.
That's American jobs. That's the economy, Mark. And that's a very positive sign. And hopefully that kind of news and what you're finding at Wells Fargo is going to be good for these negotiations. We don't have a lot of time, but I do want to ask you really quick. We're looking at the 10-year Treasury. We're below 3% right now. That seems to be kind of a concern. Recession. This is a word that's being bantered about, Mark. What do you say?
It didn't come up at dinner last night. I don't think there's a recession right around the corner. There's one thing that does concern me, and that is that the most cyclical parts of our economy are weakening right now. Spending on automobiles, commercial construction, residential construction, and business equipment, they make up 20% of our economy. They account for over 100% of the drop in a recession. And 3 of the 4 are weakening right now. So that's a little bit concerning. But we have very strong momentum behind us. I don't think we're going to see a recession in 2019.
Good.
We'll see 2.5% growth or better.
That's what I wanted to hear. Mark Vitner. Mark, thank you for being here. Appreciate it.